So 2022 was just crazy, and given how the beginning of this year is basically just taken off, I am so glad that I put more money into the stock market than I ever have before ever during 2022. Especially that last quarter in 2022 and 2023 where just the pricing was just basically steal deal pricing, and our plan we discussed during that time frame right here on this channel in detail on my group has paid off incredibly well with some epic runs in Meta, Tesla, SoFi, DraftKings, even Palantir. I mean, there's so many great stocks that have just won. It's incredible. But despite our plan paying off massively already, it does bring about a completely different problem that actually alters that plan. So we need to talk about that here today, talk about specifically what basically kind of my new plan is and what is going to alter that plan and kind of how do we deal with everything moving forward. So I'll lay it all out for you right after you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. All right, so this style video honestly doesn't get a lot of views for whatever reason. I don't know why. I mean, I get asked all the time by you guys, hey, help me out with a plan, help me lay these things out, kind of help me, kind of create that baseline for me to work off of, which I know my group isn't right for everyone, but we do have courses in there in the entire group to kind of help you formulate that plan and kind of lay it all out step by step, and of course, help you execute that plan through the time. So check out the pinned comment down there and see if, taking 5 courses for free, having access to me, jumping on our live Q&As, having the best 6 and 7 figure Discord out there, see my buy alerts in real time, all my price target watch list, all that sort of stuff. It's all down there. It's the first link down there in the description. Even though I can't cram that hours worth of content into one video right here, I'm going to absolutely just kind of lay this out for you so that way you kind of have a baseline that you can work off there to kind of, launch from on your investing journey. As honestly, the market has kind of changed and we need to obviously change, and I won't say completely flip our plans on top of themselves, but we absolutely need to make adjustments to our plan as we move forward. And that's basically what I'm going to show you right here today. So number one is I will not sell to just take profits or to raise more capital or any of the other narratives that are out there. Look, I totally understand. We have had massive runs and a lot of our stocks, and sometimes, double up, a triple up already in just a very condensed period of time. And, that is unusual, guys. I talk about that all the time. I don't care about 10x stocks or the next 10x or the next this or the next that or 2021 trying to repeat itself again. All that other garbage like that. It's not realistic. However, on the flip side of that, there's a couple of reasons why I also don't feel any need to sell too in the first place. And the first one kind of is when I look at stocks, if it's beaten down, not just to fair value, not just below fair value, but in some cases, some of these stocks were just beaten down to just ridiculous levels. I mean, like once in a lifetime type levels. I'm not surprised at all that the stock would triple up this fast. Take Meta, for example. That was a stupid once in a lifetime. It has no business being 80, much less 160. Much less even honestly, if it got up to 240, I can still make a really good case that it's still undervalued at that price. So seeing that sort of run up and still feeling like it could be, potentially undervalued, that tells me a lot right there that, hey, that doesn't mean that it's time to take profits because it's significantly overvalued. The run up in the stock is relative, and it's relative to what its actual valuation is on that stock. And the other component to this is a lot of folks are honestly just looking to take profits because they haven't solved the money problem yet. They're not figuring out, hey, why don't I have money to invest? What's going on there? Are you budgeting? Do you have a side hustle? Have you kind of sat down, looked at all your finances and figured out, hey, where can I save some money here? Where can I save some money there? And kind of create a scenario to where every month you may start off with $50 you can invest. Maybe the next month you can bump that up to $100, $200, and so on. It all makes sense and it all helps you over the long term by solving that money problem, getting your finances under control. House hack, is another strategy that I like to use to where I'm not paying my mortgage. I'm not paying rent. My tenants are paying that for me regardless of where I lived. I've done this in, very, I won't call it low income areas, but very modest areas. And I've also done it in, beachfront communities like I've done right now. So it works across the spectrum of, basically the housing market there. So it can be done. And it's absolutely another way to solve that money problem. Think about it. If you don't have to pay rent and you don't have to pay a mortgage, or at least maybe you have to pay some of it, but you're not having to pay all of it, all that extra money can go straight back into your investing. So that way you can take advantage of steal deals like when Meta's at 80 or Tesla's at 100 or Palantir's in the 6s or whatever your favorite stock is. That is absolutely how you do it. But for me, I am not going to trade to try to raise more capital to try and buy more deals. You're just chasing your tail in the end. You're basically a trader. You're not a long-term buy and hold investor. And you're not addressing the actual problem. The stock market is not a way to address your money problems, your income problems, the other subset of problems that we all have at some point in time in our lives. You've got to make a conscious effort to solve that. The stock market is not a vehicle to solve that problem over the long run. Now, sure, you can trade, you can make some money, you may make a lot of money during that time, but sooner or later, great stocks that you want to hold at some point in time, it will get messed up and you'll end up significantly having to overpay for that stock. Or you'll just never buy it at all because you'll be frustrated and upset that you used to own shares at 100, but now it's gone up to 400 and you don't want to pay 400 for that stock anymore because you had shares at 100. And then before you know it, it's a $4,000 stock in the future. And you're just sit back here saying, oh, I wish I would have done this. Stock market's rigged. You know, all the other narratives that we hear around whenever people make mistakes in the stock market, regardless of what those mistakes are, and then they kind of get discouraged and they go away from it. And I don't want you guys to do that. So despite being up on all these positions, despite having incredible runs in some of these stocks, I don't see any hype type runs, at least in the stocks that I own yet. Now, I'm not saying some of these runs are not based upon AI hype or something else like that, but nothing ridiculous like I saw in 2020, 2021, to where I felt like I needed to take those profits because, you know, those were just, if I would own, honestly, I didn't own a lot of those stocks that had those hype runs, but the ones that did, I would have probably taken profits at that stage because it was a hype run. They pulled 10 years worth of valuation forward into the current year. A lot of those stocks may never hit that valuation again. Some of them are 5 years away, 10 years away from hitting that valuation again. So it would have made sense at that stage to do that. But for me, the stocks that I own, I don't see any reason to do that. And I don't see that being the case. So I'm not going to sell and chase or, you know, bank on it might pull back or this chart and that chart. I mean, we've seen it already, guys. We've seen it from very smart people out there who, you know, have bought a stock at 7, sold it at 9 or 10, and now it's, you know, run up well past that mark, you know, in some cases almost double past where they sold it at. So it's just a losing strategy in the end for me as a long-term buy and hold investor. Number 2, I'm going to be patient and just take what the market gives me. Guys, patience is so underrated in the stock market. It's been that way forever. It's not new. It's not something that only retail investors do or only new investors do. Everybody struggles with patience in the stock market and just taking what the market gives you. And, you know, let's be honest. Let's kind of look at the past year. When you look at what the market was giving and what the market was taking from you back last year, you know, it started off with our real small caps, right? You know, they just got beaten down to death to just stupid levels. And you could just buy them. You know, you were able to buy SoFi in the 4s for like 9 months, something like that. Same thing, Palantir in the 6s and 7s, right around that same time frame. Basically, you know, able to buy in those, you know, $6 and $7 range for, I'm assuming it's 9 months. It may have almost been a year for Palantir before it finally went on its run. A really, really long time is kind of my point. You had to buy these stocks at just stupid prices. And that was the first cavalcade, right? That was the first one that kind of came down. Then all of a sudden it was like big tech was in the gutter, right? And you were able to pick up Meta in the 80s, Google in the 80s, you know, Amazon in the 80s, if I could freaking get the word Amazon out of my mouth. You had all these stocks that were large caps, you know, Tesla. It was kind of fell after those. So you kind of had those all in the 80s and 90s under $100. Who freaking knows what Wall Street was thinking? But you had that opportunity there. And then all of a sudden the Tesla opportunity kicked up there in December where it just fell like $20 a week every week for like a month. It was crazy, which means you had Tesla, you know, at 120, 115, 110, you know, 105. I think it got basically down to $100 before rocketing back up and starting its next run again. At each one of those time periods, I shifted my buying from, you know, those small cap type stocks, and I was still picking up some along the way because the deals were still there. But heck, am I focusing my money on buying those? Or all of a sudden, if I can buy Meta in the 80s or Google in the 80s, am I going to focus my buys there? You guys know exactly where my money went. It flowed into those heavy and hard while it stayed beaten down. And then as those kind of started to rise up out of the gutter, they were still deals. So I was still buying them. But then all of a sudden, you know, the gift of Tesla falling and falling and falling happened. And then I was able to shift that focus from, all right, I'm going to buy a little bit of this, a little bit of these, you know, a little bit of the small caps, a little bit of the, you know, big tech. And now most of my money was going towards Tesla when it had that fall there in December and January. And remember, take what the market gives you. A year prior, I wasn't touching Tesla. I wasn't buying Tesla. It was on my radar, but it definitely wasn't even close to what I was willing to pay for that stock. We did the math and it was basically more than a year that I didn't buy a single share of Tesla because it was overvalued. And that happens all the time because I'm just going to take what the market gives me. The market didn't give me that price on Tesla. And so I waited until it got to a price that I really liked. And then I started my modified DCA down in Tesla. The same with all the rest of those stocks as well. And then after Tesla kind of went on its run back up, I kind of rotated back to still SoFi and Palantir were both still down. So I kind of rotated in those. And then I started seeing stocks like some of the old man stocks that have been a dividend play starting to come down that I wanted to add. And so I've been able to add to those as well. And of course, there's always PayPal that I can add to that just can't seem to get off the schneid at all. But the point is, I'm going to have more than a year and a half to add to those stocks. And that's okay. I know with PayPal specifically, we've talked about it. It's beaten down. It's been beaten down for more than a year now. It's been a steal deal for more than a year now. Is it going to keep staying down? The answer is nobody knows. But I also know during the greatest bull run of history, Apple traded flat or down for a year and a half. So did Google. So did a lot of other great stocks. So if that can happen during the greatest bull run of all time, it's reasonable that a stock like PayPal that I would not put on the same level as, Apple per se, could absolutely have a period of time where it could trade down for a year and a half, 2 years, whatever the case ends up being, before it finally starts its march back up. As long as nothing's fundamentally changing underneath with the business there and they continue to execute, that's going to be the deal with that stock. And I'm okay with that. I've experienced that before. As a long-term investor, I'll experience again and again and again. And that's just the time to accumulate, build out your position. And once you get it built out, you don't have to keep adding to it. You can move on. But my point is, that's the opportunities that the market is giving us right now. And instead of trying to force it into a stock that I really, really want to own, like Apple, let's say if you wanted to add more Apple, where you're paying close to all-time highs right now, if not at all-time highs right now for Apple. And you don't want to be in that spot where you're paying that premium for it instead of waiting for Apple to come back down. Just a year and a half ago, you could buy Apple for 117. Last year, you could buy Apple for 125. It was just about being patient and waiting for it to fall down to those levels. And when Apple falls down, it doesn't stay there for long. It rockets back up again. Just kind of seems to be the way it works for now. Maybe that will change in the future. Who knows? But the point being is you got to take what the market gives you. And the only way you can actually take what the market gives you is by doing a valuation in the first place and then setting a price target for that stock, which leads me perfectly into point number 3, which I'm going to put in the work and have price targets and evaluation for every stock that I want to own, to include stocks that are significantly overvalued right now. You can't execute on any of the points that we're going to make today if you don't know actually what you should pay in the first place. And then if the market decides to dump again, you can't accurately make a decision as to is what you hold junk or is it actually a good stock, because you don't know. And even if it runs up big, you still can't tell, is this a hype run that's overvalued now? Is it at fair value and it's still got more room to run, which means I should still be buying it? Or, is it in one of another, 1,000 different scenarios that you could see with these stocks? And you can't make an accurate decision if you don't know what you own, if you don't know what the valuation is, if you don't know what your price target is based upon your plan, your risk tolerance, your goals, all those other things like that. So I will continue to put in the work on those stocks, continue to evaluate each quarter after those earnings calls come out and see where I see those stocks, where do I want to buy them, what price do I want to buy them at, and then I'm going to remain patient to wait until I get that price. But there's no point in being patient if you don't know what to pay in the first place. So you got to do the valuation. You got to put in the work on the stock so that way you know what you own, so that way you can jump on a deal whenever it happens. And number 4 is I'm going to continue to raise cash during these slow times because a lot of stocks have ran up on me. And I will continue to look for ways to increase my income and lower my expenses on the other side. I know we talked about it earlier, so I'm not going to harp on it a whole lot here, but it is absolutely critical you solve the money problem. You have to be able to have that money coming in to do that, to actually invest in the first place. And during times whenever stocks are running and you're feeling good and you kind of can relax and you're not checking your account every day, which I never recommend to do at any point in time. I don't look at all, actually. But those times are times that you need to focus your work from, hey, all right, I have all my price targets. I have everything ready to go with these stocks. What do I need to focus on next? That would be getting more income coming in. Let me take a look at my expenses even. Start there and just kind of figure out, hey, how can I lean up here a little bit? What am I wasting money on? What am I frivolously spending on? And again, look on the other side. Hey, how do I increase my income? How do I get the side hustle going? How do I, maybe take on a second job or maybe some other way of creating income for yourself? Make it fun. I mean, if you got a primary job that's able to pay all the bills and you're able to start, knocking down debt, knocking off other things so that way you have more money to invest in the first place. Hey, pick something you love. Maybe you play 6 months to where it doesn't pay you any money, but maybe in 6 months, maybe it'll start gaining traction and start paying you off. That's what I do all the time. I just look for ways to continue to cut expenses over here and increase my income over here, whether that be through businesses, whether that be through real estate, obviously stock market investing. There's a lot of different ways that I look to do that. And this is the time right now to get started on that. If you don't start right now, 6 months from now, you can't see whether or not that would have worked out or not because you hadn't even started yet. And number 5, I'm not going to speculate at all, and I'm going to ignore Wall Street, the media, YouTube, and everything else, and just simply look at the facts that are in earnings calls and on all those earnings discussions and earnings releases. I don't care about microbrewery. I don't care about economists. I don't care about this YouTuber selling this and doing that. I don't care about, the media saying this or saying that, or what Kramer said, or what politicians say, or anything else like that. It is all noise. It's all garbage in the end. And honestly, it doesn't mean a whole lot to me as a long-term buy and hold investor. All of those things that we just talked about, every bit of it, media, politicians, YouTubers, they are all trying to elicit emotions from you. And one of the worst things, if not the worst thing that destroys an investor's portfolio is emotions. So if I'm trying to keep emotions out of my investing altogether, which, the number one way I choose to do that is through a plan in the first place, a very well detailed plan, right down to the stocks, number of shares I want to buy that day, everything else like that, the price target, the whole nine. The other thing that you have to eliminate is something that's going to create emotion in my investing, and all of those things do it. So I don't listen to it, guys. You think I'm joking. I don't watch TV. I don't watch the news. I don't care what anybody else says about this sort of stuff. I am simply focused on my investing, what's happening to these companies underneath, how are they doing in regards to execution of their business. All the rest of the stuff is just noise. It doesn't matter. It's wrong way more than it's right. And if you haven't learned anything, that's absolutely what we all could have learned from 2022 is all the doom and gloom, all the fear narratives, all the traders, everybody else out there that was doing all that sort of mess, they missed out. They just did. They weren't buying Meta in the 80s. They weren't buying Google in the 80s. They weren't buying Tesla at 100. They weren't buying Palantir at 6. They weren't doing any of those things because the macro this and this chart says this and this chart says that. And when this happens and this happens and this happens 1,255% of the time, the market crashes. And then, the greatest recession ever is coming along with a depression too, and then a triple recession. And I don't know, guys, it just got crazy. It got ridiculous. And I don't need any of that sort of stuff. So I'm going to continue to just keep that all completely out of my investing because I don't need emotions in my investing. It's the number one way, I think, in my mind, at least for myself, that I can absolutely screw all this up. And if you want to see all my buy and sell alerts in real time, take 5 courses for free, see my watch list with price targets, actually DM me directly. We do live Q&As all the time. And if you want to be part of the best 6 and 7 figure Discord, and I also release a bunch of videos in there that I can't release on YouTube and a whole bunch of other stuff like that, make sure you check out the pinned comment down there and see if a membership's right for you. So click this video here if you want to see all the stocks that I'm buying right now. So thanks for watching, and we'll see you in the next one.